please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
On that note, let's get you the promised special conversation. CNBC TV18's Varinder Bansal caught up with Gagan Banga of IndiaBulls Housing Finance in our special series CNBC TV18 Checks In. Varinder began by asking Gagan about the company's growth prospects looking over the next 2 to 3 years.
On loan book basis, 25 to 30% growth is definitely visible. I will not say across all financial parameters. Around profit compounding, net interest income compounding, more like 20 to 25%. On book, the opportunity is clearly to grow at least by 25 to 30%.
So that means 2 lakh crores book by 2020?
Yeah, so on a micro basis, all execution is focused to get to 2 lakh crore. The macro also has to play along, so to say. So unless there is some massive macro disruption, it is a high probability event that we will get to 2 lakh crore by 2020.
So on the same basis, if I just compound the profit number by 20-25% going ahead, so by 2020, 5,500 crores profit should be there?
Yes, so all going well, in that ballpark, we should be there.
Okay, and you also led this company from what, 30 crores net worth to 12,500 crores right now.
Yeah.
Going by all what we discussed right now, the net worth should be around 28,000 crore?
Yeah, so if you think about numbers, then yes, those numbers can be compounded and we will get in the ballpark of the numbers that you are indicating. I think the larger joy comes from that in one generation, how one is so fortunate that we've gotten an opportunity as a management team of creating a absolute startup just a few years ago to a financial institution. The numbers that we are already sitting on allow us to compare ourselves to several large financial institutions.
Is there anything particular which you focus clearly on the numbers, when you talk to your team, that this is one thing, whether it's a cost to income ratio, OPEX, or anything particular?
The big distinction between us and a few of our peers is that we don't do business for market share. So we will only do business where it makes sense and it is giving us some positive return on asset and profit for shareholder. If there is not that case, and as the CEO, I personally fully focus on the return on equity. So the biggest strength that the company has is its shareholders base, right? Shareholders have been very kind to us. They have allowed us to get access to capital much before we needed it. So it is my primary fiduciary responsibility to make sure that their return on equity and their dividend stream is forever protected.
Well, I can't argue with that, because return on equity, which is only 3% in FY09, is currently around 26% in FY17.
Yeah.
Is that the benchmark?
Yeah, so we would like it to be in the range of 25 to 30%. Our core business generates that kind of an equity. So we will get to 30%, possibly raise capital at that time, depending on the requirement of the business, get it back to 25, 26% and build it back for shareholders. So 25 to 30% is what would be the operating range.
You left IndiaBulls Financial Services in 2004 to, of course, take charge of IndiaBulls Housing Finance, and we have seen the super growth coming in the housing finance business. Now you're going back on the board of IndiaBulls Venture also, along with Samir as well. People are expecting the same kind of growth happening in IndiaBulls Venture as well. Tell us about that. What is happening?
So in 2004, I left. In 2006, actually, I left the day-to-day functioning of IndiaBulls Securities to focus more on the lending business. IndiaBulls Ventures, now Samir and I have kind of come back on the board because there is a large opportunity which that company is trying to pursue around consumer lending. I think consumer lending with 10% household debt to GDP in India and a rising per capita is a massive opportunity. It becomes a larger opportunity if you deploy the right type of technology. For us, IndiaBulls Ventures is more a technology play, which in due course of time we wish to leverage on the ecosystem around Aadhaar, the various interfaces that are possible today to get and do a proper credit due diligence. And it then becomes a very, very large opportunity. In India, I think under or around 1.5 crore people have taken personal loan so far, or around 1.2 crore people have taken a personal loan, but around 4.5 crore people have credit cards. In China, which is slightly ahead of us in the digital payment space, in the digital fintech space, the number is the opposite. So if you think of consumer lending, then the opportunity is to grow this business 3-4 times as a universe.
Okay, we'll take a break on that note. Up next, we'll get you the BTST calls.